guess we're going to kick it off now. So I'm Valeria Kolostenko. I'm the principal of Bank Labs. I'm very excited to moderate this VC panel on what value do VCs deliver, and like, is there a real thing as a value-add VC? Let's start with a very brief round of introductions, less than 2 minutes, starting with you, okay. Fabio.
Hi, hello, I'm Fabio. I'm from Italy. I'm the founder of Iconium Blockchain Ventures. It's the first VC firm in Italy, started in 2018. We invested, just to give you some numbers, in over 80 projects in the past 4 years at the end, and with 40 successful exits. And we are actually launching. That's the news for like an audience. A new vehicle, always in Italy, focusing always in seed and pre-seed and sometimes Series A capital. And I guess you'll ask me again, but we invest mostly in tokens or safe plus tokens.
Great, thank you.
Hi, Lorenzo here. I'm Italian as well. Based in London. I'm working in Outlier Ventures as a head of engineering. Outlier Venture is a Web3 accelerator. We are around since 2013. We invested to around like 320 companies so far and counting. We are an accelerator, and big differentiator is that we have like around 80 people. We can help basically product engineering, token economics, legal, marketing. And yeah, we are super keen to be here today.
Hey everyone, I'm Jonny Chin from OrangeDAO, proudly based here in Milano. I'm originally from San Francisco, but very happy to be here. And at OrangeDAO, we have a fellowship program, which is an accelerator for early stage crypto projects. We like to be as helpful as humanly possible, and you should all apply.
Hi, my name is Kane. I am from Amsterdam, and I'm a venture partner at Paper Ventures. We are an early stage seed, pre-seed fund focusing on Web3. Sector agnostic, we like to be the first check in and lead the round, and then assist you all the way to your token listing and beyond. Amazing,
thank you. And myself, I guess, just so you have a point of reference, Bank Labs is a 100 AUM fund. I've been the principal investor there for the last almost 2 years. And we primarily invest in token deals, although we have done some equity deals as well, infrastructure and DeFi. So to kick it off, would be great to understand what additional value or support you offer companies in addition to capital.
Right, that's an interesting question that comes out all the time. There is a bull market where money is not enough, but you need more to offer. But in general, we position ourselves sometimes. We have very oftentimes we're asked questions like these from projects. But the reality is that when we enter into a project, we enter with the intention of make this project a success. So the team itself is super interested in helping in whatever way we can. Whatever way we can goes from tokenomics, if there is questions about tokenomics, it goes to introductions to other VCs, which are actually something that we do by definition. When we have a network of VCs, we try to exchange ideas about projects and try to invite them in the rounds we participate. And we also, I mean, it happened to me in the past that I also to mediate between two founders that were fighting and basically crashing the project. And I spent one entire night, because I think one was in the US, the other in Asia, trying to figure out the solution. So I would say, as stakeholders, we feel very much responsible in front of our investors also to do all the best we can to provide all the support we can. And it varies from, it also depends a lot from the desire of the founders and the team, which surprisingly is not always there, the desire to be supported. So to confront, to discuss, to evaluate ideas. On the other hand, there are some teams that actually sometimes are very successful in any case, that want to do everything by themselves. And obviously, we all know in this industry, you cannot, well, for any VC, I would say, you cannot impose anything. You need just the founders to be so open to other ideas.
Yeah, and I have a question about this a little later.
Yeah, okay.
So let's keep going.
Sorry.
No problem.
So good question, actually, I think is very relevant. So at Outlier Ventures, we are an accelerator, and one of the key aspects, we put some money in, but I think the most important asset we bring is our subject matter experts that are people like myself working basically full-time within the accelerator and working with the startups through the accelerator program that is basically 3 months, 12 weeks. But we keep staying in touch with them through basically the entire life of the project. So we definitely believe that basically when you do ventures, knowledge is really relevant. At OV, we are lucky to have basically people working full time on that. And we try to work on a tailored approach. Like we do due diligence, we work with them, try to understand what are strengths and weaknesses. And that's, it's possible because the structured approach we have, the PMs would do the screening, and then basically these subject matter experts spend hours with those teams through the program. And so depending on the venture, sometimes we work a lot in terms of product roadmaps or try to understand the architecture, suggest how they could change. Other times, as Fabio was saying, it can be really like emotional support, something really tough. It's happening, and there are humans, peoples fighting each other, and it's an issue, and you're gonna talk with them, try to figure it out, what is the problem. Similarly, these people goes through this process maybe once or 2 times in their lifetime, rather than at OV, like we work with like 300 plus projects. That gives us a lot of insights in terms of what are the problems. And so we are seeing these things day in, day out. So that is really the knowledge we bring to the funders. And so legal sometimes is crucial, and we have the people inside the company. Or marketing is, as we know, like it's so crucial, the distribution. And sometimes you have strong funders, very good technically, but then they are struggling in other areas. So I think that is really the role in general of the ventures, to bring capital, of course, but at the same time bring knowledge and give an acceleration to the funders to basically reach their goal. And at OV, we do this quite intensively since 2013.
Can I add only one thing? I've been working with Outlier Ventures for many years, and also what you do, you support like presentations, further presentations with advisors. We have been advisors in some of your projects, so it's the process of Outlier that I know very well is really.
Thank you, Fabio.
Amazing. Yeah. Let's keep the answers down to 2 minutes across the board so we can get through a lot of the questions, because I think they really add color to the VC side of the business, so we can really kind of like get into the juicy parts.
Got it.
Thank you.
Yeah, so I'll go super quick. We are a collective of founders, so we take that very seriously. We're founders helping other founders. We help you find your customers, help you grow. We are all here to listen about fundraising. So we help you with storytelling, we help you with intros. But I think probably what makes us a bit special is we have that empathy of getting ghosted by VCs, not having your pitch, your story resonate. So yeah, I think for us, we try to lean in more on those aspects of being kind of there for you, a shoulder to, not cry on, but to be supportive in all of the ups and downs of the entrepreneurship journey.
Yeah, so I'd like to take a bit more of a contrarian approach here. We don't really focus on getting your token pumped to the moon and the pumponomics. We really take a view on the operational side of things as well. So number one would be just focus on product, right? Good product sells itself. And then if you have a good product, fundraising should be relatively easy. And then you've got to pivot the question of instead of saying, what can I as a founder do for the VC, the question should be, what can this VC really do for me, right? And bring me to, or my idea to fruition as soon as possible in the most effective manner. So we really take the operational side really seriously, do a lot of PR, a lot of marketing, deploy engineers if necessary. So partnerships with AWS if necessary. So quite a lot of experience there. Most of us have been in this industry since 2014. So funded hundreds of projects in the past, been founders before. So really hands-on approach on the operational side as well.
Yeah, that was my experience with Paper as well. Last cycle, I advised 12 companies and also helped them across the board with, fundraising, hiring, providing, recommending legal team, just the basic things that, we all kind of take for granted. But I think sometimes technical founders, especially like last cycle, were, they really needed that kind of like support. So I think this kind of brings me to this next question where we talk about the balance of pitching founders' strengths and being able to balance that with the challenges. Because as a founder, when you're pitching a VC, you really want to put your best foot forward and present yourself in the best light. But then once the investment comes in, you want to be able to open up and express your challenges and, not, like, don't pretend that everything is going great. Like, really, that's what the VC is for, is to support you and help you. So how do you, what's your recommendation and advice for founders, how to balance that? 2 minutes or less.
Me?
Yes.
All
Or
right.
whoever wants to jump in first. We don't have to go in the same order.
Okay. I personally think that one of the things that we appreciate the most is transparency from the start. So even if the pitch is a sales pitch, I think that it's very valuable for us to see when founders recognize their strengths and weaknesses, and they actually share them with us. And this obviously depends on which part of the fundraising you are, whether you're a pre-seed, you're a seed, you're a Series A, things change completely. But I would say that transparency and being able to build trust with the investor, with the VC, is the key part for a founder. And the more transparent and the more honest while you're still selling, the best it is. Also because our work as a VC should be afterwards to do the due diligence, and if we are good enough in the due diligence, we're going to discover weaknesses if they're not selling.
Yeah, so for us, we're risk on, right? So let's say we target about 70 portfolio companies. We hope a couple will do 1,000x or so. So what I like to tell founders is, do not be subtle with me. Just give it to me straight, right? We've seen this before. Now the market's doing pretty well. 2021, the market was doing well. 2022 is the year where I tell every founder when we do our, say, weekly or bi-weekly check-in, is just give it to me straight. Because if you have a problem and you're keeping that hidden in the back of your mind, that's just going to torment you. But we have skin in, right? Our capital is at risk here as well. I have skin in the game with your firm. So just give it to me straight, and then we can work out all the problems you have and deploy as many resources as necessary to make your firm a success.
Yeah. Jump
I'll
around.
just fire off some quick sound bites or advice or brain drops. So talk about what you've done versus what you're gonna do. So even if you started on the project a week ago, you could say, we put up a landing page, I sat behind someone and saw them click here, here, and here, or they're excited about X, Y, Z, right? I think that differentiates you from other people pitching. Other than that, look, I think like all advice can cancel itself out. Like he said, product wins, and he's not wrong. But then other people will say, first-time founders think about products, second-time founders think about distribution. So I think it is also a bit of confidence, and VCs will push you on questions, and it's okay to not know the answer. They're seeing how you handle that situation. So I don't know is not a death sentence. You can say, I don't know, but here's how I would think about solving that, or I'll get back to you and I'll have done X, Y, Z analysis for you.
Good answer. I think another suggestion out of V, for example, it's a very structured process going through the accelerator due diligence. And I always recommend people to have a great pitch. It really helps, I think. Even if you are hiding something, it's fine. Like the first business sales is normal. However, we go through steps, and like my team does technical due diligences, and that's very different setup, because when you pitch in front of like maybe 10 people, you have a mindset. But when you talk with my team, it's just like 2 engineers, and we're talking about the product. So what we see is when people are actually saying like, look, this is what we have built, this is what is missing, this is our plan. And I think having these 2 phases is very important to see the rest of the team. So I think one suggestion is to have a strong pitch. The other one is you're going to have like multiple steps before getting money from anyone. And so during that process, opening up and explaining pros and cons is very, very important. Ultimately, we're going to work with you for like a long time. And if you're hiding something, eventually it will come up. And that looks bad for you and doesn't help, because when you have issues, it's definitely always better, as Kane was saying, like, give it straight, because then we can help. We saw many times maybe people refraining, and then actually after they open up, that's better, because now you can face the problem. So I think it's a journey where it's important that you need to understand your audience, but at the same time you're building. And so building means facing the actual problems, not push them back. So I think definitely be straight.
Yeah, good points there. Okay, let's jump into this question. In terms of demonstrating your value as a VC, how do you provide value? How do you and how do you hold yourself accountable to that? I mean, obviously, reputation is going to be one of the best indicators for future success, I feel like, in this. And I think this is one of the reasons, like, I ended up working with so many companies the last cycle, because they just knew I hustle. But what else do you do? Do you have a media presence? I mean, like, what other ways can you demonstrate your value as a VC to potential founders that are considering your fund to work with? Yeah. Anybody?
Yes, I'll just jump in. I think the best way to get media exposure is some other founder talking to another founder. So if you've worked with us in the past, you know what we can offer. And I could tell you that, firsthand, and you cannot believe it. But if another founder is telling you, hey, I worked with Paper VC, and I love these guys, they were mega value add, mega hands-on, anything I needed, I went to them, then the second founder is obviously going to be very inclined to at least talk to us. So we like being hands-on, like I said, from the get-go. So we have founders that bring us other founders, and those are usually the most valuable ones.
Yeah, maybe I can jump on this. I think hands-on is really important for us. As I said already, like, we have people working full-time in the firms. Like 80 people is a lot for this kind of organization. So we're not a pure VC. I think people that they go through the accelerator, they can really appreciate how each person that they are interacting with is really hands-on, depending on their verticals. That's one area where basically funders are always surprised by how many people are working through a program. I think when it comes after the program, we have like you are basically part of an alumni network. And I think something it's really appreciated is the fact that the network effect, like having 320 companies, it means you can talk with other funders, and that funders potentially are your partners, your customers, your next client. So I think this is really relevant for us in terms of networking, to get that people the feeling like it's not just 3 months journey, is actually a long-term investments relationship.
Yeah.
I go?
Yeah.
Should I go? Yeah, I think at the end of the story, for entrepreneurs, I've been an entrepreneur for a long time, reputation is everything. And for VCs, reputation is everything. Yeah. So at the end of the story, if people say good things about you, I've had good experiences as they were saying they're going to refer you when there is a friend that is launching a new project. They're going to do good press for you. What we do also, we publish some content about some new projects, new networks. We've done this work mostly last year that we had more time, but basically this is also just showing to the projects that we are on the same page, that we can talk the same language. The other thing that we do with pleasure is when we see when projects, when for instance a pitch is definitely not covering all the areas that should need to be covered, before saying no simply to the project, we try to help them and support them in what some points could be to improve in the pitch. And I mean, it's a very good signal if these guys after 2 weeks come with a much better pitch in terms of potential for investment. So, but once again, we want to be, I think we all want to be good VCs, because being bad VCs or trying to take advantage of situations, not only in front of the founders, but also in front of the public, as we were talking a lot of time about retail investors, I think is very, very bad. And there are a few cases that have had backlashes, and I think it's very, very important as an industry to show that we care about entrepreneurs, projects, and above all, we don't try to take advantage of the situation. Above all, when the times are bad. I would say sometimes founders, when the times are bad, try to take advantage of all the others. But this is another story.
Okay, awesome. Thank you guys so much. Let's change gears here a little bit. I'd like to talk about the narrative about VCs in this time and space that we're in terms of the narrative around venture capital and its future. So one part of the question is, retail investors these days are more reluctant to buy high-valued VC-backed project tokens. Can you comment on that? And then the second part of the question is, what other ways, and do you think that they are realistic, to raise outside of VC funding?
I mean, yeah, I can. I mean, raising from retail is obviously always a possibility, right? You can go to, let's say, Fjord or any of those and raise from retail. But they won't add any value to you directly, right? So it becomes a question of how much skin in the game can one entity take, and how much of that skin is exposed, and then do they add value to get the upside, right? So, for example, I'm also a retail investor, but if I have a $1,000 check in something, I'm not going to move mountains to help this project. Yeah. But as a VC, if I have a 500K check-in and I'm leading the round and I have the accountability of my LPs on my shoulders, then for sure I'm going to do everything in my capability to make it work. Mm-hmm. And then if you look at traditional markets, VC is still extremely, extremely hands-on there as well, right? If you have a fantastic product, there is no reason not to talk to a Sequoia or an Andreessen or any of those, while you still have a Kickstarter or any of the other platforms like October where you can just go and raise from retail directly. So good products generally still go to VC in the traditional market. I think it's going to be like that in the crypto market as well going forward, simply because of the value add and exposure that a potential good VC could add to your company.
Can I reply to this? Maybe one aspect in terms of future. No, I don't disagree with what you said. I think what we are seeing is that basically there is the retails buying in crypto are definitely not around as we speak, and there is a reason. And I think there is this meta to be early, and we keep to be earlier and earlier and earlier. And so what happens now is that when you launch, basically the retail has very little upside left, or is basically being the liquidity exit, we say, right? So no one wants to be the exited liquidity, and that's fine, it's understandable. So what I think it's happening right now is that we are shrinking the road to the liquidity. And we don't have maybe the answer yet, but what I feel is that the projects need to strike a balance in terms of what is left in terms of growth, and basically launching is not the end of the journey. And I think that is really the future of this work, where I'm expecting to see basically longer vesting times, and having funders that they need to realize that it takes 5-10 years time to really do good. And in crypto, we saw often that was very, very short amount of time. So I think that's what's happening, is that the market is maturing, and the retails also.
I do agree, actually. So if you look at companies from 2021, for example, they would raise, do the second round 3 months later, and 6 months from inception, they're already listed on, let's say, Binance in this case, right? And the round sizes were mega. So for example, I'm not gonna name the company, but I did one where the seed round was 5, the second round was 230, it's currently trading around 700, right? So the max upside retail could get was when it listed already at 700, and then you pray that it goes to, let's say, a yard. But now, things have changed. Like the VC is vesting for, let's say, 2 to 4 years already. Where last year or last cycle, I would get 20% up front. Right now, I'm getting nothing up front, and it's a cliff of six months. So then the incentives align, right? Because then I, as a VC, also want this to keep doing well for at least 6 months or more, instead of my incentive being, I just needed to pump 100x on day one, and then I can get out, right? That doesn't make any sense, right? You wanted the incentives aligned across the board, retail, VC, the seed VC, and the founders, so that everybody can add value and thus also make a buck at the end of the day.
Yeah, if I can add, I totally agree. I totally agree with this. Incentives need to be aligned, and the simple idea that both VCs and founders see the exit at the moment when the token is listed is wrong by definition. It's wrong because you're obviously putting the weight and the losses on the retail. And morally and probably also legally is something that doesn't make any sense. On the other hand, I think in this cycle, we still see mega rounds, and we still see mega valuations, probably because of the funds raised above all by hedge funds in America in 2021. It was 2021, 2022. And I think also this is creating a lot of problems for successful exit for entrepreneurs, successful exit, successful entry for retail investors. So I think there is a lot of imbalance. I lived the bear market of 2019, and that was, I mean, I was starting to invest, so it was great because valuations were really down. There were a lot of opportunities, and there were only the real entrepreneurs left. There was no buzz anymore. Yeah. And now, even if the situation is not so, I mean, altcoins are not really overperforming, there is too much money that it needs to be deployed by large funds, above all American funds, and this creates a lot of pressure on the valuations. And obviously, when you go to the market with valuations that are 100, 200, and you don't provide users, you don't provide revenues, you don't provide fees, then the end result is that you cannot go ahead.
Right. No, I think all these are good points. I think that, incentives now are so much more aligned for VCs to support and add value to their projects, because last cycle, it was like wild, wild west in terms of unlock schedules, and now we're obviously maturing as an industry, and things are changing. And yeah, I agree with a lot of what was said. But to kind of discuss the alternative funding models, what do you guys think about like fair launch or things like this? I think Kane's point in regard to that is that, if I'm going to invest in a project, not as a VC with a large stake, I'm not going to provide as much value to it. What do we think about those alternative models of funding, and what are they? Maybe we can talk about those a little bit for the audience.
I mean, yeah, so you can obviously just go to multiple platforms online and raise money there, like I said. It's just first of all, the amount of entities on your cap table suddenly skyrockets, right? So if you're raising, say, $300,000 from 300 entities of $1,000, because they're usually capped as well at how much you can invest, now you have 300 people you got to deal with that if you lose money, they're just going to be, shitting all over you on Twitter, which doesn't work in your favor. There, it actually works against you. So, I mean, I would always take somebody with way more skin in, way more accountability on his shoulders than go the retail route. It is obviously an option, but I assure you, if you have a good project, both retail and VC will be begging you to get into that project, right? So it becomes, again, what I started with is, if you focus on product and you build something fantastic, people will see the value of it. And then everybody would want to invest. And then you can split it into a VC round and a public sale if necessary, or choose a retail route only, or choose a VC round only, and just list immediately.
Sorry.
Yeah, so I think that's kind of where your focus should be as a founder, if you are. Focus on product, right? And then there's enough people in the room that can help you with marketing and PR and everything else. There's very few people in the room that can help you with product. So get that right, and then, then the sky is the limit.
I don't think I understood your last sentence. Maybe I'm repeating what you said, but I think there is also a possibility of a combination of these two ways of funding, because I see more and more in deals where there is also VC on boards, and there is one last round of financing, like to the crowd through different channels, and this helps for community building.
Sure.
So usually this is not the largest amount of money raised, it's actually the smallest amount of money raised, but and it's actually sometimes at better conditions than the VCs, but this helps with creating a community, and therefore creating buzzword and creating whatever social media channels you want.
So if that were the case and I was a founder, I'd probably go the airdrop round. So get people to actually use the product and incentivize them to use the product, and then give them an airdrop, right?
I think this could be an additional way.
Another round on
but
top.
I agree. Yeah, and it depends on the project.
So then, if you can get utility into your product, obviously that's extremely high value. But like Fabio said, you need the community to build as well, to build upon. That's very important.
Yeah, I think we could do a whole other panel on airdrops. Stay tuned for next year's ETHMilan.
But maybe one thing that's really relevant here is community. Like we have had for years, particularly at the beginning, the ICO things, and then things went rogue in multiple ways. Regulators came in. However, I think there is something we learned from that, is that the community is really needed. And I do feel like basically raising and building the community is really pivotal, as Fabio was saying. Now, I think it is really about living the upside to your community. Now, what is the upside? I think is where crypto struggled the most right now, and we are working on that, and we are seeing products improving. But we need to really basically delivering products that have revenues and actual users. I think right now, I'm an engineer. I love infrastructure plays all day long. However, we have definitely infrastructure in place. And so I feel like when people are fundraising now, they really need to put those users in the center of the project. And so I think right now what we're seeing is that there are teams building community as a way to build their capital, and ultimately it will end up to be reflected in token price, revenues, and users. So I don't know if it's answered the question, but I do feel like community is really, really crucial today, together with products that can make revenues.
Yeah, that's interesting. I have a lot more to say on this, but we don't have that much time. So I'm going to jump into this question. For due diligence process and investing into deals, what are 3 most underrated characteristics you consider before investing in a project? We know that, we look at the team, we look at the previous experience, potentially other investors as a signal. Obviously, there's so many other factors that we look at in terms of due diligence, but what are the most 3 underrated characteristics? And let's try to just name the 3, each person.
It's adjacent to what you're saying. We look at this early in the process, but also all the way through to DD, due diligence, which is, does the founder have an unfair advantage? So that's something very important to us. And then again, to what I said very early on, the done versus I am going to do, right? Even if it's only been a week, we look at, okay, within a certain time period, how much stuff actually got done?
Maybe on our side, I work in tech due diligence in our process. So definitely the skills in the CTO. Often those people are not the one pitching, but when we do a tech due diligence, you can see if this guy knows what he's doing and is not the pitching guy, but we really like strong CTO in the teams. Second one we love is people that can explain and can basically teach us something about the problem. Like, did you really go deep in your problem and I'm learning from you? That's great. I think it's way more important than the product at the early stage. Later, it's different. And yeah, third one we mentioned at the very beginning, but I like people that tell us the truth, whatever it is. Like, be open, it really helps a lot.
Yeah. 3 top characteristics.
Yeah, we were saying about underrated, but here we're saying the most rated, I think, right? So I'm underrated is difficult. But I'm trying to do an example. Team, obviously, we know is a top priority, but sometimes among looking at the background of the team, looking at whether they've worked together or they've just met 1 month ago and they started working on a project. For me, this is a red alert. And then in general, all the things that the others have said are, I'm totally convinced. We are repeating a little bit ourselves, but it's the most important thing that you have also to look at is, okay, the product is good, the product is potentially good. Does it have a market fit? And this market fit is large enough to create a project that can provide the returns that are comparable to the capitals that are invested. Sometimes these kind of things are not looked into.
Thank you.
Yeah, so a couple of boundary conditions, obviously, before we get to this one. But the 3 I would care about the most personally are how well can this team create? How well can this team sell? And the last one and the most important one is how much adversity does this team have? And that means how well can you and how quickly can you turn shit into sugar? Because shit will hit the fan. Things will go wrong. And that day, your adversity and your problem-solving skills are the most crucial. So those are the 3 I look for generally when I back a founder.
Determination and perseverance.
Exactly, yeah.
Speaking of adversity, this industry is full of young, brilliant founders that are well-funded, who sometimes struggle with wisdom-making decisions. How do you support these young founders in their decision-making process that have been told by everybody they're genius?
Yes, so I mean, if you are a genius and you start a crypto project, the market can be incredibly humbling, right? If you started in 2020 until end of 2021, you would think you're the next Albert Einstein. By 2022, you're like, maybe I'm not. And that's the day we like to talk to you, right? When shit hits the fan, like I said, and things are not going according to plan, and humbling days come, that's when you talk to Paper Ventures, and we'll show you why you are really the genius that we backed with our capital. So in the decision-making process, we trust you as a founder. That's why we backed you. And if you need a second pair of eyes or opinion, then don't hesitate to contact us. We're there, and we're online pretty much 24/7.
Nice. Anyone?
Well, maybe one thing I like young founders is that they have this very irresponsible way of doing things, and I think it's great because they're young and they don't realize maybe entirely the risks they are taking, and that I think is playing in their favor. Often what we see is that they tend to maybe lack of the full context. So what we try to do is basically offer them a larger context and say like, look, you really feel this is a great idea. Look, I have these little spreadsheets with that project that did exactly what you said right now. And we talk, like we say, why they did fail. Like maybe there is something you can learn. So expanding the context is a great way to help basically younger funders to realize if that really makes sense. Because, yeah, it's important to have the full context.
Life experience, yeah? All right, I actually want to get into something that is actually has been pretty top of mind in this cycle. What is your view on memes, and what specifically is the long-term impact of memes on our industry? Anyone can jump in. Come on, meme investors.
Very controversial.
I did a podcast 3 months ago about that, so 2 months.
Sorry.
No, it's fine, but I'm happy to wait. Go first, Fabio.
No, if you did a podcast, go ahead.
So I'm very adverse to memes, and I think like I had a long discussion with my counterparties and one of my colleagues that was in favor. So long story short is, while I think crypto is great for speculation, I think with memes we went a bit like too far. And I think part of what we're seeing right now is because memes. Now, if we take the great part in the past, I think we had the meme since Dogecoin probably, like that was the first one. However, what I don't like in this cycle is that it's too easy to create the liquidity of the meme. So back in the days, you had to basically have some technical skills that was basically reducing the noise. Right now, the noise is over everything that is sustainable. And that, I think, is when I feel the innovation is just to speed up this cycle. I don't like it. But I feel like it's great, the memes. I like to laugh. We need to strike a balance. Right now, we are on the speculation side. We need to heal.
Yeah, okay, go ahead.
No, I have to just agree. I'm against the memes in all ways, but on the other hand, those are also part of. Let's try to take it on the positive side. These are also part. I remember some guys that I talked in the early days of Solana. These are also part of increasing the number of people that are entering this world. They're doing it as a gamble. They're doing like as a play. There are young kids. Some they will learn, some they will lose everything. But at the end of the story, are part of the system. Like we have had meme stocks also in the normal, like GameStop in normal markets. And it's a little bit the power of the crowd, the community. And I've never invested in a meme coin, but. There could be something good coming out of it. Hopefully, it will not be 90% of the market in the future, because then I don't know where we're here.
Yeah, so I'm not really pro or against. I think memes as a cultural phenomenon is quite fundamental in human nature, actually. So is a meme very different than, for example, the Charlie bit my finger video that went viral on YouTube, right? You could consider that a meme as well. So I think it's actually in our nature to find something we like and get other people to like that as well. I think that's just the way humans are. And now the problem is that the accessibility to getting people to like your shit has become very easy. So I can start a ETHMilan coin today and show all you guys into it and then get you guys to buy that thing, right? And if you guys were to buy it, you're actually backing the coin because you think it will get more famous, that the meme will go more viral. And if you're shorting it, you think that it will go less viral. So you've essentially just created an instrument in which you can back the popularity of the underlying asset, right? But I think that's fundamental. I think it's fun to see and observe where that world is going. I know the Mantle team does a meme coin with utility behind it. So that's kind of fun to observe as well. So for virality, it works, for sure. Like, look at a dog with hat. Like, that's something I hadn't heard of a couple years ago. Today, 80% of the people, if not more, know the token, which is, so for virality, it really works. But I think it needs to be studied more, and a bit more regulation might be good in that aspect.
Yeah. I think going to the other side of the spectrum is, how do we get VCs to fund projects that aren't predatory, could be considered predatory, or don't want to launch a token? In other words, how do we get funding for public goods projects that build for the betterment of the ecosystem? And this goes back to my earlier discussion with some folks here of, you know, why are we here? Is it to launch tokens? Or are we really trying to change the status quo of the current financial system?
Not only financial system, I would say systems in general. So in the past, and this is a philosophy I adhere to, is in the past, if you had a system, you had an overarching like entity that needs to keep the system in place, right? So for example, if you look at a social network, it was Mark Zuckerberg and his company that keeps the social network in place. Now we've developed technology like Bitcoin, where the system can keep the system in place, and as you keep the system in place and make sure it stays, say, robust, you get rewarded for that. So it's not only the financial system you can tackle on, it's pretty much any system in which previously an entity was controlling it and keeping it in place. Today, you can actually start, let's say, another social network on chain, and instead of paying Meta, you as the guy that's contributing to the system gets paid. So I think the incentive there is a lot better, and I think that's where crypto is really headed, or Web3 is really headed. We tackle every system possible in the most efficient way possible and keep it robust.
I think it comes down to being better at storytelling, which is general advice for a lot of you sitting here, because that's certainly something that I've worked on for many years. Early in my entrepreneurship career, I would go pitch like on Silicon Valley. I'm old enough to remember when people had to go into Silicon Valley, Sand Hill Road to pitch. And some VCs would say, oh, you need to work on your storytelling. You need to be more like Elon Musk. And in my head, I'm thinking like, what does that mean? Obviously, Elon Musk is, yeah, doing great, but like, what does that mean for me? And so I've really worked on storytelling. And I think if you get better at storytelling, then it'll then play into options, which means you'll have the ability to choose between retail or different VCs, and so then you'll be able to compile the right investors that will help you then take your project to the next level. But coming back to the topic at hand, I think we as an industry, for those who deeply care about solving big problems in the world beyond the meme coins and token go up, should figure out how we can better articulate and quantify these problems that exist, and then tie it to our product or our operating plan. And so, yeah, it's just TLDR, get better at storytelling, and hopefully we can do that because this is something that I deeply care about, which is solving the big problems, and hopefully a lot of you came into this industry with that type of rallying cry, and hopefully many of you stick through it so that we can solve those big problems.
Yeah, I just, in 2 words, I would like to say, I don't know, I guess that the industry is made by people that want to launch token and people that want to do something bigger. I think we, as Iconium and as Starblock, we are here because we believe that blockchain and crypto will disrupt web and finance. So that's I think the final mission we see for blockchain.
Yeah, well, I will keep it short, but I definitely think that in crypto we have a lot of example of funds or foundations created by public utility, like Gitcoin, even the Arbitrum Foundation ended up to have a funds dedicated to builders. I think like it's really easy to do it in crypto, and it's a matter to see basically funders that when are launching are even allocating, and sometimes it's a great marketing tool. What is great about that is that we can put energies and funds towards this public good. And so I think compared to other industries, I think crypto is not doing too bad in that sense. I hope that we will keep in that direction, and we focus to basically creating actual products. I think we need to reduce the speculation.
Right. Thank you. And we have 2 minutes left. So I think the last question I have, and you guys have 30 seconds each. What are the top elements founders should focus on today to build investable companies? And what is the next conference they can find you at? What are the top elements founders should focus on to make themselves investable? And what is the next conference they will find you at? 30 seconds or
Okay,
less.
in 30 seconds is almost impossible to say what they should focus on. But first, I think they should focus on having a product fit, competitive analysis, and afterwards having a team. People will find me in Milan, and they can find me on LinkedIn. I don't know which conference I will be next.
Okay.
Yeah, definitely product. I think you can make everything happen if you have the product. So really focus on that. And you can find me online and probably in DEF CON, or I will try to be there.
My assumption is many of you have played games or are gamers, so treat fundraising or building your startup like a game, and then go aggressively seek out those cheat codes, whether they are from more experienced builders. A lot of it's online now, so just go find those cheat codes and then just try to keep advancing in the levels, and don't get discouraged if you have one annoying boss that you have to overcome.
Focus on product. I completely agree. You can find me here over the next couple of hours, so please come and reach out. And after this, I'll be in Bangkok for DEF CON.
Woo!
And we'll be doing events and stuff there. So if you're a founder or in the space in general, please reach out to us. We are very affable. We're much nicer off stage than on stage.
Same here. Thank
We'll be
you
there
so much for the great panel. Thank you.
Thank you, guys. Appreciate it. Thanks,
Thank
Val.
you.
Thank you.